Hello everyone, and welcome back to the channel, your go-to source for understanding the mechanics behind hard-to-borrow stocks and potential short squeeze setups. Today, we're diving deep into a fascinating name that's recently landed on our screener, Zhongchao Inc., ticker symbol ZCMD. This is a company operating in the healthcare information services sector within China, providing vital education and training to healthcare professionals through its endemic brand. Before we get started, please remember, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's talk ZCMD. Zhongchao Inc. is a microcap stock with a current market capitalization of just $7 million. It's a company focused on healthcare information, education, and training services. What specifically caught our attention with ZCMD isn't its core business, but rather its current borrow dynamics. Over the last 5 days, ZCMD shares are down 8.13%, and looking back 30 days, the stock has seen a significant decline of 41.87%. Today alone, ZCMD is down 11.72%. Volume today sits at 1,758,868 shares, which is relatively low compared to its 30-day average volume of 9,735,621 shares, giving us a relative volume of just 0.2x. Show ZCMD chart with price and volume. What is cost to borrow and why it matters? So, what makes ZCMD unique right now? It's all about something called the cost to borrow, or CTB. For those new to this, when investors want to short the stock, they first have to borrow shares. The broker charges a fee for lending out those shares, and this fee is annualized. That's your cost to borrow. When a stock is hard to borrow, it means there's high demand to short the shares, or the supply of available shares to lend is very low. This pushes the CTB fee sky high, sometimes even well over 100% annually. It's essentially the rent you pay to hold a short position. Why this stock is hard to borrow right now. And ZCMD's cost to borrow? Outstanding 846.6% annualized. Highlight CTB number on screen. This is an extremely high fee, signaling that borrowing shares of Zhongchao Inc. is incredibly expensive. While we don't have CTB momentum data or the exact number of shares currently available to borrow, that 846.6% figure alone is a red flag for short sellers. The estimated float for ZCMD is quite small, at just 1.1 million shares. A low float means there are fewer shares trading freely in the market, which can amplify price movements if demand shifts suddenly. Our internal composite squeeze score for ZCMD currently stands at 47.5 out of 100, reflecting these factors. Squeeze mechanics explained. Why does this high CTB matter? It ties directly into short squeeze mechanics. When a stock becomes hard to borrow and the CTB rate skyrockets, it puts immense pressure on short sellers. Every day they hold their short position on ZCMD, they're paying this astronomical fee. If the stock price starts to rise, even a little, short sellers face a double whammy: losses on their position and those high borrow fees. This can force them to cover their shorts, which means buying back shares in the open market to return them to their lender. If many short sellers are forced to cover simultaneously, it creates a cascade of buying pressure, driving the price up even further. This is the essence of a short squeeze. For a low float stock like ZCMD with only 1.1 million estimated shares, even a moderate amount of covering can have a significant impact. Dilution risk check. Now, an important check for any potential squeeze setup is dilution risk. Dilution occurs when a company issues new shares, increasing the total share count. This can flood the market with supply, often negating any short squeeze potential by giving short sellers more shares to cover with, or pushing the stock price down. For ZCMD, we've checked recent SEC filings over the last 90 days and found no recent diluted -1, -3, or 424B filings. This is a positive sign for a squeeze thesis, as it means the company isn't immediately expanding its share count through offerings. Recent reverse split watch. Another critical factor for ZCMD is its recent reverse stock split. Zhongchao Inc. executed a 1-4-3 reverse split on June 29, 2026. That was just 32 days ago. A reverse split reduces the number of outstanding shares and resets the share price higher proportionally. While it doesn't change a company's market value instantly, it does reduce the float. Historically, many microcap stocks like ZCMD tend to see renewed volatility or even a price pop within about a month after a reverse split as the market digests the changes. This is a pattern we've observed in some names, not a guarantee, but is certainly something to keep in mind for ZCMD in this timeframe. Again, I want to reiterate our disclaimer. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you be watching with ZCMD? The incredibly high 846.6% cost to borrow is the headline. Keep an eye on the daily trading volume. An increase in volume, especially on green days, could signal increased buying pressure. Remember, a high cost to borrow does not guarantee a squeeze. It can also indicate that short sellers have strong conviction in their bearish thesis and are willing to pay a premium to maintain their position. Monitoring any news coming out of Joncha Inc. related to its ND services or segment performance could also be relevant. The recent reverse split and the historical pattern of volatility in the month following are also key considerations. Joncha Inc. ZCMD presents an intriguing setup purely from a hard-to-borrow perspective, driven by its 846.6% CTB and small 1.1 million share estimated float. With no immediate dilution risk in the recent reverse split, it's certainly one to keep on your radar for its unique market dynamics, even with recent price declines. What are your thoughts on ZCMD and its high cost to borrow? Let us know in the comments below. If you found this explanation helpful, please hit that like button, subscribe for more deep dives into hard-to-borrow stocks, and turn on notifications so you don't miss our next video. Thanks for watching, and happy trading!